Hey everyone, Micron Technology is slated to report quarterly financial results on Wednesday, June 26th, and investors are curious if they should buy Micron stock before the company announces earnings. So I'll answer that question in this video. I'll also provide a preview of what investors can expect from Micron when it does announce those earnings results. So let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so in its previous quarterly earnings results, which Micron announced on March 20th, the company said revenue increased to 5.82 billion, and that was a big jump from the 3.69 billion the company reported in the same quarter the prior year. Micron operates in a cyclical industry. Its revenues and profits go up and down based on the cyclicality of the industry. Right now, Micron is on the precipice of a big upturn in the industry, especially as artificial intelligence is increasing the computing power requirements within devices, including telephones, computers, laptops, iPads, etc. And so the demands from these devices for increasing memory, increasing storage are going to be great news for the industry in which Micron participates. And so Micron's going to benefit from that uptrend as well. Now, in the second quarter, the company's results, gross profit margin, and EPS were well above the high end of the company's guidance. And that's been the story with Micron so far, is the results are coming in much better than it expected. Coming into the year, Micron was forecasting low single-digit growth in personal computer sales. It looks like that's coming in better than expected. Initially, Micron told investors it was not going to increase manufacturing capacity, but just a couple of weeks ago, it did announce that it was indeed going to increase manufacturing capacity after all, because demand is coming in much stronger than Micron anticipated in just a few short months. So their product portfolio positions us well to deliver a strong second half of 2024. We believe Micron is one of the biggest beneficiaries in the semiconductor industry of this multi-year opportunity enabled by artificial intelligence. And that's what I was talking about earlier. Artificial intelligence is increasing the computing power needed on these edge devices. And so these devices are going to want to have more memory, more storage, more capabilities than prior generation cycles. So that's going to create a boost in demand for Micron's memory and storage units. Now, in terms of what to look for the next quarter, Micron told investors to expect revenue of 6.6 billion and gross profit margin of 25.5%. The revenue number of 6.6 billion would be up from the 5.82 billion in the previous quarter, and the gross profit margin of 25.5% would be up from 18.5% in its previous quarter. So both of these numbers will be better than what the company delivered in the second quarter. The earnings per share, meanwhile, will be less. The diluted earnings per share of 17 cents expected would be a decrease from the 71 cents the company delivered in earnings per share in the previous quarter. Looking at the longer-term outlook, Micron told investors that calendar 2023 DRAM bit demand growth was in the low double-digit percentage range, and storage or NAND bit demand growth was in the low 20% range. So both a few percentage points higher than previous expectations. This was in 2023. Demand came in higher than expectations for their big segments, right? DRAM and NAND. So for 2024, they are forecasting demand growth for the industry to be near the long-term compound annual growth rate for DRAM, which is around mid-teens for NAND. And given the higher baseline of 2023 demand, these expectations for 2024 have driven an increase in the absolute level of 2024 demand for both DRAM and NAND versus their prior expectations. So, in other words, demand is coming in better than they had thought, even though they had thought that revenue and demand was going to be increasing in the double-digit range, high double-digit range. But now it's even better than expected. And over the medium term, demand growth of mid-teens for DRAM and low 20% in NAND. So solid rates of growth for the medium term, right? Mid-teens is 14, 15, 16%, and low 20% range is something like 20, 21, 22% growth for these two critical components for Micron. And given that they're recovering from the bottom end of the cycle, this growth is going to deliver surging revenue and profitability. I should say surging profitability for Micron, because they're coming off of that bottom. And so they're going to utilize more of their capacity, and that's going to lead to strong economies in scale, which Micron has demonstrated before to boost profitability. So as I highlighted, if you look back for a decade in Micron, you can see the cyclicality of the business, right? Ups and downs with the cycle. That's normal for Micron. And right now you could see it bottomed and now it's on that uptrend, right? The company forecasting strong growth, and you've already seen evidence of the turnaround in its revenue. And so you're already starting to see that in its cash flow from operations. It bottomed out in the end of the previous cycle, and it's now returning to the up cycle. And the company at its peak can deliver very strong cash flow from operations to sales, hitting 60% levels in 2019, 2018. So I wouldn't be surprised if in this cycle it jumps back over 40% cash flow from operations to sales as this cycle develops, right? This AI wave, this AI investment is not just a one-time thing. This is creating an increase in demand several years going forward, and that's going to benefit Micron Technology for several years, according to what management is saying. And operating profit margin, similar story here. You see the cyclicality, with the most recent downturn being the most severe, given the big decrease in sales for personal computers, tablets, etc., electronic devices overall, because of the boom cycle in 2020, 2021. Then the big bust cycle, because people were spending more money away from home, not buying as much electronics. These are long-lasting goods, right? If you buy a personal computer or a laptop or a tablet or a smartphone, you're going to use these for at least a couple of years in most cases. And so if you buy one in 2020 and 2021, you're probably not going to buy one in 2022 or 2023. So that created a big gap in demand and a big cyclical downturn. And now, as those products will need replacing and upgrading, that's when Micron is going to benefit, because now, unlike 2-3 years ago, these devices are going to want incrementally more storage and incrementally more DRAM because of artificial intelligence. To run some of these AI models, these AI apps, these AI-enabled devices are going to need more computing power, and that's going to be great news for Micron Technology. So the stock is trading at a forward price to earnings of 15.94. So I think it's an attractive valuation. I have Micron stock rated as one of my top 25 stocks to buy. I last updated this recommendation on May 30th. Now, whether or not to buy it before or after earnings, I usually say it's safer to buy the stock after earnings. The days after an earnings release make a stock extremely volatile. There's violent price movements surrounding the stock. And unless I feel a stock is so undervalued that it's, prudent to buy it before or maybe split it up, I usually give the advice of saying it's always more prudent to buy after earnings. Micron, I don't think the stock is undervalued significantly enough to require buying ahead of the earnings release. I think whatever you see out of Micron in the earnings results, even if they're better than expected, and the stock price jumps, let's say by 20%, that stock price jump is going to be because of better than expected results. And so you're still going to be getting a good value to get Micron stock even after earnings. So I don't feel you need to rush in here and buy it before earnings, even though I do have Micron rated as a top 25 stock. If you're on the fence about buying before or after, I would suggest buying after earnings as it's a lower risk moment. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.